For natural gas pricing in India, there are two kinds of methods. One is what I have called the assessed prices, and in the assessed form, it is usually government that administers the price, and there are some other forms which private companies also take on. The second kind of method is a method that's linked to international prices. It is usually linked to either the international price of crude oil, or it could be a market-linked price, which is a price that's linked to the market either in the US, UK, Japan, etc. In India, we follow both methods, and we've been following both methods for a very long time, since early 2000s. Some of the government administered prices, particularly for sectors such as power and fertilizer, are administered prices and assessed prices. And the ones that are done by private companies, and either when we import natural gas in the form of liquefied natural gas from countries such as Qatar and Australia, we do it at market-linked prices, and also when companies such as Reliance explore gas and produce gas locally, that is also done at market-linked prices. There has always been a dilemma in India on which pricing to take on. The issue with assessed prices is that it is very difficult to gauge accuracy as well as appropriateness. There is no way to verify whether a price assessed by a government organization or within a deal that is done by a private company and a government organization, the price at which they arrive at is efficient or fair. The problem with internationally market-linked prices is that if it is, say, done in dollars, and because if the consumers are paying in rupees, then the Indian consumers have to bear the burden of the difference in foreign exchange, or the foreign exchange risk, if the value of the rupee were to fall. The other issue with market-linked prices is that if our prices in India are pegged to the price of crude oil or to markets in US and UK, that automatically pegs us to the volatility and vagaries of that particular foreign market. So, for instance, if the price of crude oil were to go up and down, then it would affect the natural gas pricing here in India directly. Similarly, if the price was pegged to US or UK prices, then we are linking ourselves up to the financial markets and the energy markets of that particular country, where the prices are determined or discovered based on local considerations. So it's not just the price of gas, but also hedging, speculation, risk assessment, and other geopolitical factors that may determine the best pricing in the US and UK markets. And so then in that case, simply adopting an international market-linked price for India has its limitations, because it does not naturally and automatically mean that it's the best price for India. When the Aam Aadmi Party raised this issue on gas pricing, it's actually a lot more complex issue than the way it has played out in the mainstream media. The initial price that Reliance had offered and agreed to sell its gas to NTPC was at an assessed price of $2, approximately $2. But that price was then subsequently revised, and it was linked to a international market price of $4, because it was linked to the price of crude oil. And then, most recently, last year, the government has moved officially and comprehensively moved to a market-based price for all contracts going forward. And that market-based price is linked to US, UK, and the markets in Japan, and to some of the prices some of the rates that we pay to the exporting countries such as Qatar and Australia. Because the government has moved, Reliance is asking, and that's what the government is considering, that when the Reliance contract is up for revision in April 2014, that the new formula be used and the Reliance contracts be linked to that international market price, which is close to $8.